U.S. stocks plunged in a steep sell-off on Friday after Federal Reserve Chair Powell commits to fighting inflation. Powell stated that while higher interest rates, slower growth, and softer labor market conditions will bring down inflation, they will also bring some pain to households and businesses. These are the unfortunate costs of reducing inflation, but a failure to restore price stability would mean far greater pain. Now, to be clear, the pain part, that's for you and me. And with that, the Nasdaq dove 3.9%, the S&P 500 crashed 3.3%, and the Dow Jones Industrial Average cratered 3%. All three major averages settled at 4-week lows. So, Americans face opposing forces. On one hand, Powell is promising that pain is coming and that he's going to crush demand. But on the other hand, Biden has midterms coming, and Biden will boost demand by discharging more debt and come up with new stimmies and maybe even invent newer definitions. So, let's take a look at the damage. First, we're going to take a look at the 2-year weekly chart on the volatility index, also called the fear gauge. And as you can see in the upper left, the symbol sign is $VIX using stockcharts.com. Now, we haven't talked about this for a few weeks, but we can certainly see that things have been developing. This is a very nice dish moving down here and then on the way up here on the right side. The move down here came a little bit lower than I was anticipating. I didn't think it was going to go below 20, but I still don't think that's a problem. But yet, we did have a bounce off of this level here, moved right through the moving averages, the 200 and the 50, and we're at this point here, 25.56, so it's elevated. Now, will it continue? And as you know, the VIX essentially moves in the opposite direction of the markets. When the markets go up, the VIX comes down. But when the VIX goes up, the markets come down. So right now, the VIX is heading up and the markets are going down. Does it have strength to continue? Looking down here in the bottom portion of the screen, you can see this black line here. This is the fast line. It's starting to bottom and base and just heading up to the slow line, which is in red. It hasn't crossed through, so we will be watching for that. If the fast line crosses through the slow line, then we could have more fireworks coming soon enough. Now, back here to the price chart, it does look like it's getting elevated here and likely to continue. There's a lot of bad news ahead of us. Here into the upper portion, you see the RSI. The RSI has taken a pretty good bounce, moved on up and just barely through that 50 or midline, but it looks like it wants to continue heading on up. Let's just see how that evolves in the coming weeks. All right. Let's go to our charts. And sticking with the 2-year weekly theme, we're taking a look here at the spiders, the SPY, and the close on Friday was down hard to a 405.31. Now, from this top here, we had a pretty steep dive all the way down here to this point, but we bottomed and based, and we headed on up. However, looking at this trend line here, you can see the trend line moving on down. We basically got to that top and we reflected back down here. Now you can also see this bottom trend line moving like that. Now when you have an increasing trend line or channel, that's a megaphone. So basically you watch the movement in the stock, or in this case the indice, and it starts tight, but it starts to widen out further and further, which means if it sticks true to that, the downside could be even farther down. We'll have to watch for that. No guarantees. Moving on down here into volume. Volume looks fine. Here in the MACD, you can see definitely a nice bottoming and basing, but we're here at -10 to perhaps say -5, definitely under that zero line. So it is weak. It's strengthening, but it's still weak. Into the histogram, you can see possibly a rollover at this point here. Are we going to continue on down? I think we'll probably continue maybe for a week or more, maybe even longer, but we'll just have to wait and see. I think the probabilities are for further downside. These other oscillators will show you the same thing. Price rate of change is weakening. It's the fast line here is above the zero line, but likely going to continue down below that zero line. Same thing here with the RSI, actually going just below that 50-year midline at 48.29, but it looks like it wants to head on down too. Same thing with the stochastics and the Williams. The Williams is coming down pretty quickly. It's generally the first oscillator to head up or down, and it looks like it's heading on down. Let's just see if it gets through that midline or 50 line and heads down even further. But right now, these oscillators are showing me signs of weakness. And as you can see from the price chart, I think things do not necessarily look good. Again, I think the probability is for downside. Are we going to go all the way down with that megaphone pattern and continue further than the previous low? Well, we might just test that as well. Right now, I'd say we are heading down, but I don't know if we're going to test or if we're going to fail and continue further down. There is a lot of weakness out there. When we looked at the monthly chart last week, definitely there's a separation in the MACD between the fast line and the slow line, and that indicated volatility, and that's what we're getting. And for today, that's ChewDog Charts. Thank you.